Your Partner in Success Radio is a free business podcast with host Denise Griffitts. It's all about great stories, conversation, and context to help you move your business and life forward with actionable tips and advice from her guest experts. To listen and subscribe, just find us on iTunes, Google Play, or wherever you consume your podcasts.
Good morning and welcome to Your Partner in Success Radio. I am your host, Denise Griffitts, and today's guest is Frederick J. Fisher. He is an attorney, consultant, and liability insurance pioneer. And with over 50 years in professional liability, he has helped reshape the industry. And he's done that with sharp insight, bold commentary, and a deep commitment to client protection. He's also the author of Claims Made Insurance, the policy that changed the industry, and a founding member of the Professional Liability Underwriting Society, where he also served as president and earned the prestigious Plus Founders Award. And known for coining, I love this, he is known for coining the gotchas that'll get you. He's trademarked that, and I laugh every time I read it. And even being called an insurance coverage terrorist, he doesn't pull any punches. He spent decades as a claim adjuster, built a major insurance wholesale brokerage, and served as an expert witness in high-profile cases, all while educating and advocating for smarter, safer coverage. So here's why you're here today, and here's why he's here today. If you're a professional navigating the tricky world of liability insurance, especially lawyers who he says are the worst at protecting themselves, you're about to get a dose of wit, wisdom, and information. Good morning and welcome to the show, Fred. It's good to have you here. And thank you for sending me your book, Claims Made Insurance, the policy that changed the industry. It's on my desk as we speak. But before we dive into what promises to be a fascinating and helpful conversation, I'd like to ask something that I ask many of my guests because I think it tells us so much about who a person really is. And that is, how do you choose to show up in the world? Whether it's leadership, service, or how do you carry yourself day to day?
Boy, that's a good question.
I know, huh?
I know, I like it. How do I like to be perceived?
Right. And we're off. Yes, I knew.
I mean, who wants to be sane in an insane world, really?
Right. I
So,
mean, now you're talking my language. We don't even need to finish a show. We can just go tit for tat all day long.
exactly. But no, I've been swimming against the current my entire career.
What do you mean by that?
Well, as my wife would say, I'd rather be right than rich, and I can tell you that I've been right a lot.
Oh, boy. Yeah. You didn't
I
listen to your wife, I take it.
Really, but no, I'm basically a problem solver, and if you identify a problem, then more often than not, the solution becomes obvious. And now the question is whether that solution is possible to implement. And I was very successful at it in protecting my clients, and it even goes back to my claim days. You know, I've been in this professional liability industry for 50 years, and my first 20 was as a claim adjuster, but we were handling claims against lawyers, against insurance agents, against real estate brokers, against any number of professions back in 1975, before the economy started changing more and more from manufacturing to service-based businesses. But we handled all sorts of crazy stuff, including something called Seedman's E&O from underwriters at Lloyd's. Basically covering companies that manufacture and distribute, seeds for agricultural purpose. They could have a serious claim if nothing grows. I handled a couple of things like that. And it was fascinating work. And back then, we were dealing with insurance policies that were called claims-made policies, which were relatively new. My earliest policy in my library dates back to 1972. Which was the policy I was working with on many instances back in 1975 when I started. And you started seeing solutions to problems and quick ways of settling cases and creative ways of settling cases, which saved the insurance company money. It made the insured happy. And certainly the claimant, the third-party person who was claiming injury, he's happy. He didn't have to wait 5 years to get to trial.
Right.
So there was a lot of innovation going on back then when you had insurance companies who were willing to be creative. And I can give you some examples if you'd like, but nonetheless, we were also dealing with something called a claims-made insurance policy. I had never heard of such a thing. I mean, I was in law school at the time and going at night, which I did intentionally. But the who had ever heard of such a policy? It took me several months to finally get a handle on the nuances of it. Number one, until the 1980s, as documented in my book, um, the word claim was not defined in the policy.
Now
So,
that's just bizarre.
yeah, what is a claim? So back
I
then,
know.
took numerous appellate decisions to say, well, it's a demand for money or services, got to be the more popular one. But it all boiled down to what did the insured know and when did he know it? Because the danger with a claims made policy is if you're buying your policy for the first time, are you already aware that you've made an error in the past that might give rise to a claim against you in the future?
Oh, no. Now you're going to have to give me some examples.
Well, suppose that you're an attorney and you've never had malpractice insurance before, and you just got notice that a default has been taken against you because you haven't filed an answer on time to a lawsuit. Or worse, you didn't file the lawsuit on time, so now it may be time barred because you blew the statute of limitations. But now you're going to file an appeal. Now you're going to do everything you can to try and set it aside. And if you're successful, then you know that you're not going to have a plaintiff who's a former client suing you for malpractice. But you've got an application for insurance to fill out because you haven't had coverage in the past, and it asks you, are you aware of any fact or circumstance that could give rise to a claim in the future? And you answer no.
Uh-oh. Even I know better than that.
Yeah, exactly. But you should be surprised how many attorneys even now will answer no to that question.
Do they really think they're not going to get caught? I mean, these days you can't walk crossways down the street and somebody has got a camera on you.
I think the only explanation I have is that they think that if they get it set aside, and there's a good probability they will, then there won't be any NO claim against them. But the problem is as soon as you start thinking like that, you're already aware of the possibility of a claim.
Right.
And whether it's successful or not is not the point. And finality, finally having an appellate court saying, sorry, we're not going to set aside the default. Sorry, we're not going to give you more time to do this or whatever it is, is not required. It's the fact that you are already trying to fix a problem that could give rise to a claim and you've lied on your application. In the book, I don't know if I cited the statistics, but previous to the book coming out in 2024, I wrote a lengthy article that reviewed 224 denials of coverage that fell into one of, 4 or 5 categories around the United States. Every single one of them I agreed with. And it turned out that lawyers were responsible for 28% of all of them. That was the highest percentage.
Was that surprising to you? It doesn't seem surprising to me.
It was and it wasn't. I mean,
Now, if
when you
you'd
get
said
to it,
lawyers or politicians, I would have said,
yeah.
well, yeah.
Well, yeah, politicians have immunity usually, but
No.
they can't be sued. But the point is, you also get in the situation where the second largest category were directors and officers, because directors and officers buy, coverage to protect themselves as corporate officers. Those two are written on what's called a claims-made basis. They were the second highest category, and it made perfect sense to me. What happens when you're a director or an officer of a company and you're served with a lawsuit? You should tender it immediately to corporate counsel to handle. And
Uh,
they may not
uh,
get around to saying, "Oh yeah, do you have DNO coverage?" Put them on notice.
right.
That was the second largest category at 20%. So 48% of all claim denials were experienced by either lawyers or directors and officers. And there was no excuse for it. All of that was, every single one of those claim denials was preventable.
Does, and I'm guessing this is why you wrote the book. And I was
Oh,
going
one
to
of the
ask you what inspired you to write the book, but that's got to be part of it.
Well, from 1990 on, I started writing articles about various segments and problems arising from the evolution of the claims-made form. By 1990, for instance, I wrote an article called Claims-Made Triggers, guaranteed to cure insomnia, by that. But, the reason for it was that suddenly, starting in the 1980s, insurance companies started thinking, it's kind of ridiculous not to define what is a claim. So they started putting the definitions in the policy, which was a good idea, except there was no consistency.
Oh, okay.
You
Because
could have a
they
D&O
didn't.
policy that defined a claim, the word claim in boldface,
Right.
one way. You could have an E&O policy that defines it a different way. You could have an employment practice policy to cover you from sexual harassment and wrongful termination claims and discrimination claims. It might have a completely different definition of claim, and they're all claims-made policies, and you have three of them, and they all have different definitions.
So you stepped in and started educating people.
Well, I tried, part of the reason being is you were having all these appellate decisions coming down, whether this definition was enforceable or not enforceable and what have you. And it was creating more claim problems than being solved. Because in essence, you're supposed to only have one policy that's going to cover a particular claim. And in one case, appellate case, there were three because of the way the language, because of the way the word claim was defined. You had three different policies covering it, which isn't supposed to happen. So that's why I wrote that article. That led to my being asked to be a technical advisor for the International Risk Management Institute, who were in the middle of writing a 3-volume manual that turned out on professional liability. And to this very day, 30 years later, or 35 years later, it's still the only reference manual on professional liability that exists in total, that covers the whole industry of professional liability and specialty lines insurance is what it's actually called now. And so they asked me to become the senior technical advisor of those manuals, and I'm still technically the senior technical advisor for 35 years later. Meanwhile, from 1990 forward, I've probably published 8 or 9 more articles, maybe 10, on particular segments of the claims-made form and professional liability forms that are problematic, and how to avoid them and make sure you've got the financial protection you should have, reasonably expect to have. And so finally I thought, you know what? I should take all those 11 articles and just put it in one concise essay, so to speak. And that's how the book was born. And it didn't take long to do. The
Well, I
book is
wouldn't
easy.
think because
The
you
state's
already
got 11
had
articles.
it, right?
Yeah.
You already had the information. It's an interesting book, and I'll be honest with you, I know nothing at all about insurance other than I need it. In fact, insurance companies demand that I have it, which kind of irritates me, but I understand why I do need it. But I
Well,
still can't.
you may be surprised to find out, Denise, that you've got a claims-made form for your media liability policy.
I do?
You might. You better look at it.
Oh, crap.
Claims-made policies are so dangerous that the NA and the National Association of Insurance Commissioners, which I'll abbreviate to the NAIC, wrote a model act, and one of the that the states are free to adopt and modify as they see fit. But they wrote a model act about claims-made policies, and one of the things you'll see on every claim-made policy is in boldface. They are required to disclose that this is a claims-made policy, and then they'll add several other sentences. And and because of the nuances in the policy, it's not a hard and fast requirement. There's plenty of breathing room to accommodate the various different ways in which insurance companies write these policies, and pretty broadly. And but it is there. It's in boldface. It'll be on the declaration page. It'll be on your application, page 1 of the insurance that you're applying for. It'll be on page 1 of the policy form itself.
And I wanted to ask you, Fred, what exactly is claims-made insurance? I've read it. I've read your book. We've talked about it. I still don't understand what claims-made actually means.
Well, let's look at it this way. When you get into a car, your car insurance, your auto insurance, your homeowner insurance, those are written on what's called an occurrence basis.
Okay.
And what that means is that an occurrence is defined universally as an accident that takes place during the policy term. So when you run the red light and hit somebody because you thought it was, you could make the yellow, so to speak. Number one, that's the occurrence because it's an accident. Hopefully you didn't intend on hitting that pedestrian or the other car. Number two, it must take place during the policy term. So the immediate reaction from anybody in an accident is, thank goodness I just renewed my auto insurance. Thank goodness I just renewed my homeowner insurance if it's a slip and fall in the driveway or something. And because the occurrence must take place during the policy term. And it makes sense because when you run the red light, when you hit a pedestrian, when somebody slips and falls on your driveway or something, um, the injury is almost immediate. It may not have developed. Nobody may know how serious the injury is yet, but the accident has taken place. And it's reasonable to assume they're going to try and hold you responsible. So the occurrence has to take place during the policy term. But let's look at professionals. When you buy insurance from your insurance broker and he gets something wrong, whatever it may be, you're not going to know about that until you have a
So
claim.
you need
You
it,
sit,
right?
yeah. And then the insurance company says, oh, no, he got the address wrong. We're insuring this property, 2713, not 2715.
Does
Or,
that really happen?
yes.
Oh my goodness.
Or an attorney, again, but now it's not a failure to file a lawsuit on time. Maybe he's doing your will and trust. And then he does something that violates tax laws. And nobody's going to know about that until you've passed away. And unfortunately, that might be today, or it could be 20 years from now or 30 years from now. So nobody's going to know that an error was committed because an error by a professional does not give rise to immediate damage.
Okay, now I'm following. Okay, keep going.
That's not always true. For instance, in medical practitioners, that usually when there's malpractice, the injury is immediate, but not always. Maybe they left a sponge in you, and nobody's going to find out about it for 6 months, that sort of thing. Um, but usually, with professionals or an architect does a load factor miscalculation and doesn't realize that the pedestrian bridge over a freeway is not solid or not stable, and nobody's going to know about it until the thing collapses.
I don't think I'm going to walk outside anymore.
I can't go
I
around
think
the world like that.
I'm
But
going
the
to
point,
stay put right here in front of my
but
monitor.
but so from that point perspective, what happened was, why would you want an occurrence policy for that? Because that means you, number one, have to keep every policy in storage forever. Number two, you also have to keep all your files in storage, all your evidence.
Oh. Well, isn't that a good idea, though, anyway, to keep your files?
Well, it might be, but who wants to keep 40 or 50 years worth of files around,
I was
especially.
just, yeah, I caught myself right after I said it. So, sorry.
Exactly. Well, you don't have to apologize to me. But so that was part of the reason. And from an actuarial standpoint, and again, I don't know, insurance companies base their premiums based on a statistical analysis of what's happened in the past. They look at the past behavior of claims and what's been paid and the nature of claims and, degree of injury and what have you. And the actuaries take that data and try and predict the future from it. With an occurrence policy, that's very difficult to do because, just because a manufacturer makes a defective product doesn't mean that the defect is going to materialize right away. It could materialize in 5 years. And all of a sudden, planes are falling out of the sky that for 5 years have been flying fine. So the problem was, how do you close a policy year when there's this future that needs to be taken into consideration? And so that makes it very difficult, but at least statistically over the centuries, literally centuries, actuaries have come to the conclusion that if you can close a year after 5 years is usually a good example of it. But that's not always true. We found that out with environmental claims dating back 30, 40, 50 years, triggering policies that are 40 years old. So that doesn't always work. But with claims made policies, the claim has to be made during the policy term,
Okay.
irrespective of whether
And see that now you're actually reaching through my block here because I'm still what is claims made? But
it
once you
means that
explain it like that, the fog is lifting a bit.
what the policy covers is when the third party you allegedly injured decides to do something about it.
Got it.
Here's the problem with it though. You, the policyholder, have no control over that. You don't know when somebody's going to make a claim against you. You may not even know you made an error. Or you may not even think you even made an error. Or maybe you didn't make an error, but somebody wants to claim you did. So the point is, what the theory behind a claims made form is that when the policy expires, they can close the book on it because it's not supposed to get any late reported claims are going to be covered.
Okay, say that again.
When your policy, it's a 1-year policy. These claims,
Right.
When it expires, if nobody's made a claim against you, the actuaries can safely, or supposedly, the theory was they can safely say, "Oh, we can close the book on that file now. We had no claims, and so the premium's 100% earned, and that's all going to be profit now because we had no claim during that policy term."
Okay, I'm following.
That was the theory. Doesn't always work out that way, trust me. So as a result, policies have evolved significantly since 1972, which is the policy form that is in my library. That is the oldest one I could find. It
Well, and
originally
that
started
makes
in
sense.
1964. Pardon?
Oh, really? 1964?
Yeah, that's when Joe D'Alessandro supposedly invented it, as
Oh,
documented in the book. But there is some controversy there. There is another organization out there that's been around a very long time. It used to be called Victor O'Shinner and Company, and they just rebranded it to Victor. I think Marsh owns the company, I think. But they've been around a long time. And they started writing architects and engineers and real estate brokers in the 1950s. And it is alleged that Mr. O'Shinner came up with a claims-made policy at that point in time. I have not been able to find a copy of it. I'm not going to deny that that's a distinct possibility, that he invented it first. Um, but then it doesn't really matter. It really didn't catch on until the 1970s. And then as more and more service-based businesses started popping up, and really that took off in the 1990s, that, you've seen such a huge proliferation in insurance companies writing professional liability insurance, and what's also called specialty lines, and using claims-made forms, and the policies have evolved. Originally, there was only two conditions. The claim must be first made during the policy term, and there's a warranty that you were not aware of any fact or circumstance or error that might later turn into a claim. That was it.
unless you lied. And if you lied, you're in trouble.
Yeah, but they have to be able to prove that. But
Okay.
nonetheless, that was it. Now, you've got as many as 5 conditions or 6.
You know,
It's evolved significantly with a
my
lot of
tum
credit and a lot of what I call gotchas that'll get you.
I just grabbed my Tums bottle, I gotta say. I wanted to go back a little bit, and we'll come back to this in a second, but you have served as an expert witness in some really high-profile liability cases. So, without breaking any confidentiality, can you share a few that really stood out? And what did you learn from them?
Ooh. Well, I have handled a lot of claims. First of all, there are claims against insurance agents and brokers. Mostly, I have handled some bad faith cases, and occasionally I'll handle something else. But only if I feel I have the experience and knowledge to be able to do it properly. Otherwise, I'll turn it down. But I'd say 70% of the cases I handle involve insurance agents and producers. And I do plaintiff and defense equally. I do about 50-50. To me, it's about the case. And I think that makes me very credible because to me, if I don't like the case, I won't take it. And if I just, during my research and review of the matter, if I find that the facts aren't as originally told to me, or I discovered some other problems, I reserve the right to withdraw. I am not going to try and make a case when I don't believe in it. So
Good for
that
you.
said, I've handled everything from failure to renew an auto policy and failure to recommend limits, for instance, to multi-million dollar cases that, as far as I was concerned, shouldn't have even been brought, but somebody's trying to cover up their own error, supposedly. But I handled a huge case by a major developer against his insurance broker. It was totally ridiculous. He was being sued for a project that was quite large, and he had towers of insurance, I mean, for liability, and towers of insurance for construction defect and pollution. He also had a general liability policy for slips and falls. He had a lot of those. And but a general liability policy excludes environmental claims. A general liability policy excludes construction defect because there's other policies to cover that, which he had.
Right.
But he did have this particular lawsuit tendered to his general liability carrier, who didn't deny coverage, mind you. They reserved rights.
Now, what does that
And
mean?
It means that they were putting the insured on notice, so we may have a duty to contribute to your defense, but we don't know that we actually have coverage.
Okay.
And so we're
Fine.
reserving our rights that we may not end up paying anything in settlement.
I'm writing all this down. That's why I keep asking questions.
Well,
Reserve
go right
right.
ahead.
Okay.
I'm sure your listeners are going to have the same questions. So so they decided this is a heavy hitter billionaire we're dealing with. Let's not create any unnecessary litigation. So they reserved rights rather than deny coverage. And immediately they go berserk and say, oh God, there's a problem here. And we're going to have to hire our own attorney to monitor the underlying litigation in relation to this policy and blah, blah, blah. And they ran up a 7-figure bill.
That's going to be another question, but keep going.
So they sued their insurance broker saying, well, this general liability policy shouldn't have reserved their rights and we should have been covered without them reserving rights. Were they out of their minds? They had coverage. They had policies to cover the construction defect. They had policies that were covering the environmental claims. Why are they suing their broker? It was an absurd lawsuit. We got a defense verdict.
I'm
We
wondering.
went to trial. I was the last witness to testify as a defense expert, and we got a
Right.
verdict on all 4 causes of action.
Good for you.
Well, that
next-
wasn't just me. I'm not going to take credit for that.
No, I know, but you were
contributed to the
there.
defense. Yeah,
Right.
but it was a team. But we got a defense verdict on another case. Where I was a plaintiff. We got a nice verdict against a major insurance brokerage. And again, this was a preventable claim. What had happened was they were the broker for a very large company that invested in elder care facilities. And they had bought one and they decided they needed to renovate the whole darn thing. So they moved everybody out. And so they decided they needed to buy what's called a builder's risk policy. And what it does is it covers the property while it's being constructed or when it's under renovation, whatever. And it takes the pressure off of, because it's a first party policy. It's not a liability policy where liability has to be proven. It's first party, much like your fire insurance on your home. You have a fire loss, you get a check pretty fast.
Right.
Builder's risk does the same thing. If there's a problem, even if it's a problem by the contractor or a subcontractor, the insurance company is going to pay that loss pretty quickly and then go after, they call it subrogation, where they go after the person at fault. But at least you, the policyholder, don't have to do that yourself, which could delay construction for years.
Well, and that makes sense. Like, we're going into hurricane season in just a couple of days. You and I were talking about that.
So
And 3 years ago, I lost my roof, but I'll tell you what, once we finally got assessors to get out here, because this part of the country was just knocked down. Once we got that done, the checks started coming.
Right. So let's look what happened here. To insure this company for its legal exposure to elder care, you can imagine they had towers of malpractice insurance and other liability insurance, towers. And they did. The premium was close to $1 million.
And this is what I wanted to mention earlier. What point does there come a point where businesses almost can't afford to do business without marking things up to Mars?
Well, it's built into the
Because
cost, for sure.
it would have to be, but
Yeah.
it just seems to me there comes a point where they have to say, I don't know if I can keep on paying these bills.
Yeah. Well, let me tell you what happened in this case, and it gets even crazier. The premium, however, for the builder's risk started out at $3,800. The broker didn't want to be bothered with such a small premium account policy because they're only getting 15% commission. So that means on a $3,500 premium or $3,800 premium, they're going to see $400 or $450, as opposed to the $1 million policy where they were making $100,000 in commission or more. Okay. So what they did was they didn't handle the placement. They went to what's called a wholesale broker to handle it. And that way, the majority of the work is being done by a wholesaler. And they quoted the $3,800. But there was a question raised because the policy, as quoted, only covered the area of that building being renovated. It didn't cover the entire building.
Oh,
And they kept asking, and the underwriter at the insurance company kept saying, do they want coverage for the entire building? And it never got answered. So they issued the policy with only the area under renovation. So what
oh,
happened?
I see where you're going.
Oh,
I
yeah,
know what happened.
exactly. Some subcontractor drills holes in the roof and there's a bad rainstorm and the entire building is flooded. So they dropped the ball on a $3,800 premium and got sued for $10 million.
And they could have avoided it.
Nobody was paying attention.
That's crazy.
And as
Listen,
I've
I
always
don't care if it's 3,200 or a million, you still need to do your job. If this is what you're contracted to
precisely.
do your damn job. Excuse the language.
That's how I trained my staff. I mean, after I got out of claims, I formed a wholesale brokerage and I told everyone on my staff, what makes you think that because it's a large premium account, that's more dangerous than that small little not-for-profit D&O policy you're writing for the local chamber of commerce? That's the one that's going to get us into $1 million E&O claim because you don't want to take the time on it to make sure it's correct.
Well, not only that, but you also don't garner any loyalty, any referrals. Nobody trusts you. I mean, why in the world do
Yeah,
you
you get them
want to
into
stay?
it.
Yeah, I mean, why do you want to do that to yourself?
I agreed. But here's the problem. And believe it or not, it started in California in the 1980s. And this is another part of the show that I think is very important. 37 states, 37 do not require an insurance agent or broker give you any advice.
What?
You heard me right.
37?
37 states do
Is
not.
Louisiana in that? I need to
Um,
know.
I don't think, I think they might be. I think they
Oh,
are.
Lordy.
It's called the Order Taker Standard of Care.
Oh, okay. And
And
it's probably exactly what it sounds like.
exactly. It is exactly as it sounds. It means that they have no more duty to advise you as to what your needs should be or how to properly cover them than your order taker at your favorite restaurant.
Oh, well, that's just lovely.
Yes, and there are only, like I said, there's only 13 states that don't follow it. Florida being one of them, by the way. Florida holds insurance producers almost to a fiduciary standard of care. New Jersey has codified that and made it a law that insurance producers operate at a level consistent with a fiduciary standard of care, highest standard of care, much the same as a lawyer. And it makes perfect sense. Any insurance agent or broker with 5 years experience, even if it's selling homeowner and auto insurance, is going to know more about the ins and outs of that policy than any consumer will ever do. But let me ask you another question, Denise. Would you go to a doctor? Would you want to go to a doctor who says to you, well, Denise, what's wrong with you today? And how would you like me to treat you?
Um, I don't know. I don't go to doctors. Honestly, I really don't. I know that sounds silly, but I never get sick. Although 3 Thanksgivings ago, I woke up with shingles of all things, and I was able to walk into the clinic, rip my shirt up, and because the doctor said, "Well, what do you think the problem is?" And I said, "Shingles," and she said, "Oh yeah, that's it." So, but I honestly, I can't answer that. I don't know. How should I answer it?
The answer would be no. You want a doctor that is going to examine you and find out what's wrong and give you, and then tell you what the options may be for treatment. And
Okay.
he also has the obligation to explain it to you. It's called informed consent.
Okay, now I understand. Yeah, I mean, that does make sense. You don't wanna go into anywhere where you're asking questions, and they don't have any answers or responses for you. They just want you to sign something.
Hmm.
Okay, gotcha.
But insurance agents don't have that obligation. And what's even
That's
sadder,
bizarre. I'm sorry, Fred, that's bizarre.
of course it is. Now, as a professional expert witness, I have to, so I'm giving you a personal opinion on that. I don't agree with the order taker standard of care at all. I've actually written an article on it, and it was published by, believe it or not, what's called the Professional Liability Defense Federation. And at the time, I was the co-chair of the Insurance Agent and Broker Committee. And here I'm writing an article that says the order taker standard of care is absurd. But that's a personal opinion. Professionally, if I'm retained as an expert witness in a case involving one of those 37 states that follows the order taker standard, I am going to testify I'm going to testify that that is the standard of care. Whether I agree with it or not, I
Right.
don't have the power or the rights to say what the law should be.
Well, and that's not what they're asking for, is it? They just want you
Well,
to
some
tell
people
them,
are.
is this, oh, really? Is this true or isn't it true? But yeah, I get it. See, I could not do what you do. I don't have a I do have a cast iron stomach most days, but right now I'm telling you, I'm rubbing my tummy. It's like, this hurts.
Well, I find it's fun in a way, and
I
I
can
even
tell. I can tell
well,
by the way you're talking about it.
it's amazing to me how some lawyers are very not knowledgeable in this area, and yet they like to think they are, and it's pretty funny actually. But it's amazing to me how little they know about the insurance industry, and so I had some fun with that for sure.
Well, I can imagine. I wanted to go, let's talk about, I'm running all over the place here, but I've got notes and I'm scribbling notes. You had mentioned earlier that trademarked phrase of yours, the gotchas that'll get you.
Yep.
I love that. And you did trademark it. So my question
Well, in
is,
the process, the application is pending, but
oh,
it looks like it's going to go through.
oh,
It,
it
yeah,
should. I don't know anybody else that would even have that.
no,
But
not
what
even
are,
close.
what are some of those hidden traps that professionals need to watch out for,
Oh my
especially,
God,
and you
they're
mentioned it
everywhere.
earlier, special lines coverage?
They're everywhere. It's not even limited to specialty lines anymore. It is, and it's being done intentionally. I know of
Gee, I'm
several.
shocked. I'm shocked. Do you
Yeah.
see my shocked face?
Actually, I have seen articles written by lawyers that have published articles on how insurance companies can draft policy language so as to be able to avoid claims they normally would pay.
I am not surprised. Sadly, I'm not surprised. I
And
don't
I'll
think
give you a
anybody
good
listening to us would be surprised by that.
I'll give you a good example of it because even I still have a very difficult time wrapping my head around this case that came down last year, and it was in uh, New Jersey. And what happened was, I don't know. This is a public record, so I'm going to mention names, which I rarely do. But
No,
this
no.
involved Pharmacia Corporation. Pharmacia is a huge multi-billion-dollar um, company that makes pharmaceutical products. So you can imagine how they have product liability insurance and other insurance literally into the stratosphere. And so that's called layers of excess coverage, excess liability coverage. They might have a self-insured retention for the first 5 million or 10 million. And then after that, they can buy excess coverage in layers of 10 or 20 million, sometimes maybe even 30. But you build up this tower of insurance, and I'm sure they've got over, I had no idea, but I'm sure it's $500 million or more, maybe even higher. When you do that and you want to enter into a settlement, the first thing you have to do is get permission from all the insurance companies that we have an opportunity to settle this case. We need your permission because, it's their money that's going to be helping to pay the settlement.
Right,
So you have
right.
to get their permission first. So they entered into a $207 million settlement.
$207 million.
207 million.
Okay.
This they had when you actually read the appellate decision on it, you get an idea what happened. It was what's called the sixth layer of excess. So there were five other policies below. So it turned out the sixth layer of coverage started at 160 million.
Okay.
They
And then
had
how did they get
obvious
up to 200 and some odd?
There'd be other layers above that.
Okay, gotcha.
And whatever the layer this was, I don't know if it was 10 million or 20, and it really doesn't matter. It probably wasn't more than 30. That's for sure. So, but it was probably 10 or 20. It was more likely. Nonetheless, they had two conditions in the policy. This wasn't an endorsement that was tacked on. This was in the body of the policy. It was all in one sentence. The first part of the sentence said it was a condition that all underlying insurers had to have exhausted their limits, meaning paid the total. And that I would expect. I have no problem with that. And now it's our turn to pay. Now, $160 million below us is on the table, and we got to pay our limits. Well, there was the second half of the sentence that was the problem. Not only did all underlying insurers, not the insured, mind you, not the policyholder, but the insurance companies, not only did they have to exhaust their limits before this policy is triggered, they also had to admit liability.
Um, Even I think that's a bad idea.
Yeah, who admits liability of government?
Yeah, it doesn't even make a lick of sense to somebody like me who is, fairly logical.
Yeah, and this is an insurance company, saying this. You have to admit liability. I've never heard of that before, but the court enforced it.
Ooh,
It was clear and unambiguous, is what they said. Clear
well,
language, easily understood. This is a condition that has to be followed. And so this insurance company got to walk away without having to pay their 10 or 20 million. But here's the problem with that. All
so
the
now it's out there, so now other people are gonna do it.
Well, not only that, but all the insurance companies above them were out of the case as well because they also
Ooh, okay.
everybody uses that standard language and all underlying policies had to pay their limits. Well, here's a company that didn't. So Pharmacia had to basically, you know, cover $47 million because they only had 160 million in insurance.
Now, let me ask you this, and it's a silly question, and I know it, but I'm gonna ask it anyway. Because this happened, are these is there any means to say, "Okay, we're not gonna do this anymore. Y'all can't do that."
The other way around.
Oh, so
It
it wasn't
was
a silly question.
after the
Okay, tell
after
me.
the uh, um after the Pharmacia case came down and it was widely publicized, including by yours truly. Um,
No.
there was a law firm that wrote an article that was distributed by one of the aggregators. There's lots of aggregators that, publish a daily thing and, from law firms summarizing or, putting out these quick articles, 2 or 3 pages long usually. And here's how this law firm finished their review of the Pharmacia case. And they, they discussed it accurately, described accurately what happened and why and what have you. And here's the final sentence, and I'm quoting, quote, "In Pharmacia, an elementary policy condition shielded an excess insurer from an otherwise coverable loss. Retaining experienced counsel to assist in reviewing policies can help an insurer craft strong coverage defenses that limit risks and saves costs."
So what I'm taking away from that is everybody who is in this tower needs to fully understand what everybody else is doing. What's
Exactly.
in their policies. You can't just go, "Oh, okay, good enough," and then find out later.
And then for me, it's a way in which you can draft policy language so you're not covering things that anybody would normally expect to be covered. This
Exactly.
wasn't even a gray area.
It sounds like dirty pool to
It
me.
is dirty pool. And this lawyer's doing it. This isn't the only one. I've got several articles where lawyers have said the same thing regarding director and officer liability policies or the usage of absolute exclusions. I'll give you a good example of absolute exclusions because this one, I've been on a warpath about them since 2009. I've probably published as many articles on absolute exclusions as I have about claims-made forms. What it is it's an exclusion that says we don't cover any claim arising directly or indirectly from fill in the blank. It should go on to say committed by an insured, but
Oh,
many
gotcha.
times it doesn't. If it's limited to the insured, I normally wouldn't have a problem with it. Most exclusions fall into one of four categories, and one of those categories is there's another policy that covers that. So don't look to your automobile liability policy to cover you for an environmental claim. If you're worried about, asbestos, get an environmental liability policy. And that's why there are so many exclusions in today's policies because there's another policy that covers that. But if it's not limited to the insured, that means it applies to anyone who committed this problem, whether you know about that person or not, whether he's employed by you or not, if you're a business. So let me put that in perspective for you. Insurance agents and brokers routinely sell clients, especially commercial clients, employment practice insurance to cover that company for wrongful termination suits, sexual harassment suits, and discrimination suits. Very common coverage today. It's part of a portfolio of corporate coverages. But what if the insurance broker screws up and he gets sued for some reason by the client saying, oh, this policy isn't covering me. Obviously, you made a mistake, which may or may not be true. It doesn't matter. They're going to make the allegation. So now they're suing their insurance broker. So the insurance broker turns it over to his malpractice insurer. And in his policy, he may be shocked to find there's an exclusion that says, we don't cover you for any claim arising directly or indirectly from any act of discrimination, harassment, or wrongful termination, period. In other words, it doesn't go on to say committed by an insured, meaning we're not going to cover you for your wrongful employment acts. We're not
Again,
covering
dirty
for
pool.
any employment acts. So now, will the claim be covered? No.
No.
So, but
That's
here's the trouble with
pitiful.
that.
Fred,
There
that's
are
just pitiful.
there are 14 different absolute exclusions in an insurance broker policy form that would exclude from coverage any claim where the insured is selling those policies to a client, and they're all routine. Every one of them.
Oh. Okay, now I'm following. Again,
That's how.
I
That's
follow and then I kind of dip out because I didn't understand a word of what you said. And then I go, oh, I got it. I mean, this
and
is
then you got to.
fascinating. I am following most of it. But
And
okay,
so the
for
point
listeners,
is,
go ahead.
even insurance brokers are being screwed on this
Well,
whole
and
thing.
that's what I'm taking away from you. And, from listeners who may not think about liability insurance from day to day, what's the one thing that you really, especially after listening to this conversation, what do you want them to take away from this?
Well, there are two things. If you're a professional providing a professional service of any kind, look at your policy carefully and ask the right questions. Never, ever buy insurance on price.
Mm-hmm. Right.
Never. Because what are you giving up? No two
Well,
policies are alike. Even in auto and homeowners, no two policies are alike.
yeah, I'm dealing with homeowners right now, and it's
Right.
insane,
Now,
especially because we're in Hurricane Alley.
now
And I
here's
mean,
the
our insurance prices are just
here's the
through
other
the roof.
thing. Your insurance broker, as I told you, in 37 states, doesn't have to advise you of anything. So that means you have to know more about it than your insurance broker. What you need to do is take the time and sit down with him and make sure he tells you all the things you need to know about your policy, including sublimits. I don't think anybody realizes that even in their homeowner policy or their condo policy, there is a sublimit for water damage. There is a sublimit for additional living expense. Is it actual loss sustained, or is there a 6-month or 1-year time limit? Is there a sublimit where we're not paying any more than X amount of money? You got to find that out on your own. How about code and ordinance coverage in your homeowner insurance? What that is if you've got a 70-year-old home like I do, and it burns to the ground, how much of rebuilding is going to be increased due to the fact that over the last 60 years, the building codes have gotten stricter and therefore making construction more expensive?
Well, isn't that what's happening after the LA fires?
Well, of course, but most people don't even know what code and ordinance is because their insurance agent didn't tell them. And
They
they
didn't
didn't
think to tell
realize
them, or they didn't know to tell them?
they didn't either one. But
Okay.
they probably did know about it, but they just don't have a duty to advise. Remember, they don't have a duty to
Right.
advise you unless, and here's the carve back. They don't have a duty to advise you unless they hold themselves out as an expert, mis- misrepresent coverage, which you got to be able to prove, or they agree to do a risk management review for an additional fee in addition to the commission
Oh,
area. Those are the exceptions to the order taker standard of care.
okay. So what I'm going to tell our audience is if you're going in and you're talking, it doesn't matter if it's mortgage insurance, that's just on my mind right now. You take this book with you. Take a notepad with you. Ask questions.
Make them tell you what you need to know and do it and document it.
Yeah. Yeah.
Because the
And
same is true of insurance agents. My first article on for insurance brokers on how to prevent malpractice My first article in 1979 was called Document, Document, Document. Document your advice. Document you told that you made recommendations and warnings. If you don't document it, it didn't happen. And even to this very day, you'd be surprised how little is being documented. Unbelievable.
Now, when you say document it, do you put your phone up there and say, I'm going to record this? Do you take notes? Do you do
That
both?
do both or document it. Well, right now, most insurance agencies, most businesses are heavily automated. And there is a way in which you can document what conversations you had and what recommendations you made in the software itself. But what's wrong with sending out an email? What's wrong with sending out a fax
Right,
saying,
right.
here's some options. You've given us an order to bind, but you haven't told us you want these additional options. And we're giving you one last chance to do it.
Now, can I, as the insured or potential insured, can I ask for that information that you recorded as the agency? Can I
Well, you
ask for the
can,
documentation?
of course, or you can document it yourself. Here's what
Kind
I
of like
need.
asking for your X-rays when you move, from doctor to
Well, something like
doctor.
that.
Yeah,
What
yeah.
you can't, what you cannot do is tell your insurance agent, "I want the best coverage. I want to be covered for everything." Well, that's too overly broad.
Mhm.
And beside which, you cannot be insured for everything. That's impossible. There's no such thing. And so you have to be, you really have to put it in writing that you expect them to sit down with you and go over your policy and review it um, every year. I mean, I always told my staff, there's no such thing as a renewal. Treat it like new business, because I can tell you one thing: if there's a competitor of ours trying to get this account away from us, who do you think's going to dig deeper, us or them?
Them, obviously,
Yeah. So
because
you
they
got to
want the
treat
new
it.
business.
Yeah. So don't treat a renewal as a renewal. Treat it as new business. Ask the right questions. What's changed that we have to worry about and cover?
And I was gonna say that because if you're going to just have a renewal, things do change in a year. I mean, quickly, sometimes slowly, but there are going to be changes. I mean, maybe your neighbor took the fence down between you and now your dog's running around like crazy. I mean, things change.
Yeah. Yeah. But like I said, with the order taker standard of care, unless they misrepresent coverage or hold themselves out as an expert, they have no duty to advise you.
Again, I'm clutching my stomach. I really am. I wanted to ask you, and this is in my early notes up at the top. You've been described as an insurance coverage terrorist. I think I mentioned it when I
Yep.
was introducing you. That's quite the title. Where did that come from, and what does it really say about how you approach this work?
Very simple. I was always about providing my customer with financial security,
Oh,
reasonable financial security. I wasn't even looking to cover gray areas. I just normal and customary. So I loved it whenever one of my underwriters, "Hey, Fred, we just updated our policy. We can't wait to get it out on the street. Would you like to have an advance copy?" I said, "Absolutely." And within 15 or 20 minutes, I would send them back a red line version. Here's what I like. It would be highlighted in green. Here's what an FYI we should be aware of is in yellow, but it was the stuff I marked in red. This has got to be changed.
and do they ask you this a lot? I mean, I would. I mean, knowing your expertise and knowing where you're coming from and what your real goals are, I would be
Uh,
handing you documents and saying, "Don't hurt me," but you're going
it,
to anyway.
It didn't take long for my underwriters to cringe when I would ask them, "I understand you got a new form. Please send it to me," because they knew right
Yeah,
away. It wouldn't
yeah.
take long before they got back a red line version saying, "Okay, here's what we need to fix." But you know what? They did. For me, they did. I can't tell you how many times I had an underwriter saying, "You're the only one asking." I said, "Well, that says a lot.
Yeah, it does. And
It
I
means
wanted
I'm going to have a field day with my competitors because I'm going to kick their butt."
absolutely, and if you're doing the right thing, you're doing the right thing. You speak
Well,
to
it's
a lot of
both.
different groups, you're a speaker, so who's in the room when you present, and what kinds of conversations are you having?
Well, it depends on who the audience is. I present to other insurance agents and brokers. I do a course I've been doing for 35 years for lawyers called Insurance 101 for New Attorneys. How can you how can you defend an insurance broker with a third year associate doing the workup if he doesn't know the difference between an admitted and a non-admitted insurance company?
Good question.
Well, in 1 hour they get that from me. It's called Insurance 101 for New Attorneys. I've been doing it for 35 years.
It seems to me like what you're doing is very much needed. And I think more people need to be aware of what it is that you're doing. And it's not just people who are in the industries that you've mentioned. It's people like me who need insurance. We all have to have insurance. But you're right. We don't know what questions to ask. We just don't. It's
Well,
not something that we're taught.
it boils down to, are we providing financial protection or are we just selling you some toothpaste?
Ooh, okay.
And
Gotcha. That's
that's
one of
the
those gotchas.
yeah, because that's the problem. Every day we see TV ads saying, "Oh, I just saved $400 on my auto insurance. I just saved all the money on my homeowner insurance." Where we are being brainwashed into saving money, which means that we're taking coverage away from ourselves. Number one. And number two, there's also the placebo effect. Here you go, Denise. Here's your policy. You save $400 moving it to me. Don't you feel good?
Me being me, I would be deeply suspicious.
And yeah, but you don't know whether or not you've got anything good or not until you submit.
Right. And I
And
don't
that's
know why I'm suspicious. So that's when I sit down. Well, I would have sat down before and said, what am I really getting? I do this all the time with my podcast guests, with my web development clients. What's in it for them? Not what's in it for you. What's in it for them?
mhm. But here's the thing, you know, it's not only a question of you don't know whether you've got a good policy or not until you submit a claim. Believe me, that's not when you
Yeah.
want a
Yeah.
surprise.
Yeah. You've said that and I believe you. Listen, Fred, it's been fantastic having you, here today. It's amazing. I mean, I've read your book. I've read it twice, almost 3 times actually, and I've reviewed it, but I want to know what's up next for you. You have any upcoming books? I would
Yep,
doubt it. Oh, you do? And you have
yep.
or talks or resources our listeners should know about? And when's that book gonna be ready, and are you coming back?
Well, there's a bit of a delay on some of the research going on, and, the research has been done, actually. I just need to get it all put into a spreadsheet, and I've got some people helping me with that, and so we're a little behind schedule. So I hope to have it out next year, but it's called The Gotchas That'll Get You. And it's an
Good.
overview of maybe 15 or 20 commonly purchased policies, and it's for the consumer. Here's what you gotta look for, because here's where the gotchas are.
And you'll come back when that book's ready, right?
Well, of course, if you
You
wanna
can't
if
tell
you
me
want
no.
if
If
you
I
still
said
if
it on
you
the radio, you
I don't
can't
know,
tell
after
me no.
this airs, you may not talk to me again.
I'll be talking with you again. Well, listen, before I let you go, is there anything that you want the audience to know? Any final thoughts? And where can people connect with you and find your work?
Well, number one, they can go to my website, is at, Fisher, it's, Fisher, and it's Fisher, C as in Charlie, G as in George, which stands for Fisher Consulting Group. So it's fishercg.com. A lot of the articles that I've, recently published are there. You can download them, including, one that's called, One River, Two Currents, and that deals with the standard of care of insurance agents and brokers, which again, I have to say is a personal opinion, why it's wrong, and the order taker standard of care. And so that's number one. Number two, never take your insurance producer for granted. Ask questions, make them sit down with you. Take the time. And be careful of captive agents. I mean, if you go to some agents only sell with one insurance company. Go to a broker who has access to many. Get competing quotes and make them sit down with you. And finally, whether you're a commercial buyer for your business or you're looking for your own personal insurance for your home and condo and car, never buy on price. Never buy price. Buy coverage.
And I believe you. I wrote that down twice. Never buy by price because it's difficult. You think, oh, geez, do I really need that extra $1,000? Well, it turns out you probably do.
And
Well, listen,
also start bugging your legislature about changing the standard of care for insurance producers.
oh, I'm going to go find out. I don't even know if that's something that's going on here in
Louisiana's an
Louisiana.
order taking standard.
Uh, okay, now I'm Tums again.
And plus, you're also dealing with Napoleonic civil law.
We are,
Yeah.
and a lot of people don't understand that. When we've years ago, not all that long ago, we still had the Napoleonic Code where you could not go into a grocery store and buy pantyhose or beer. You just couldn't. And I remember standing in line, they said, well, pantyhose, you don't need them. And I said, you don't tell me what I need. And we got in a big old argument. I never did get them. I mean, this is back in the pantyhose day. And this is before I realized that living in the Deep South, Once you get those things down, you can't get them back up. So she was right. I didn't need them. We're damp all the time. Southern women don't age badly because we don't dry out. We don't wrinkle. We just don't.
Well, I'm a firm believer that all women should spend their formative years in the South.
So we do. We cook and we do all kinds of neat things. Well, listen, everybody, what a fascinating conversation with Frederick J. Fisher, and he's a true pioneer in the world of liability insurance. And from the surprising truth about how professionals protect themselves or don't to the traps hidden deep inside the fine print, Fred gave us a straight-talking, no fluff look at an industry that most people overlook until it's just too darn late. We talked about his book, Claims Made Insurance, the policy that changed the industry. We talked about why lawyers tend to be their own worst liability risk, which I guess is not that surprising, and how his trademarked phrase, the gotchas that will get you, and that's going to be a book pretty soon, came to life from real world experience. And we also got a peek behind the scenes of his work as an expert witness, an educator, and speaker, and the passion that you just heard that he brings to helping others avoid really costly mistakes. So thank you for tuning in to Your Partner in Success Radio. I'm Denise Griffitts, and I'll see you again. Fred, thank you, and I really look forward to having you come back soon.
My pleasure, Denise. It's been a pleasure, and thank you for hosting the likes of me. And, as I call it, sometimes this is morning mania.
I enjoyed it. I'm still eating a lot of Tums, though, so I guess I don't need lunch today. And I'll blame you for that. Thank you again, and I look forward to reading the new book. Let me know when it's out.
I certainly will. Thank you again for hosting me, and my best to everyone out there, and all stay safe.
My pleasure.
Get your voice heard. If you would like to launch your own far-reaching podcast, contact Denise Griffitts at yourofficeontheweb.com and go to the podcast tab.